Hello, everyone. This is Michael Wallace at Peak Advisors, Denver, Colorado. Today we have a action-packed, information-packed webinar that is addressing QuickBooks Payments and how that using QuickBooks Payments saves you time and money. We're hopefully going to have 3 guests, so you won't be listening to me for the 30 minutes, and we're going to move fast. Questions, please put them in the chat and we'll try to answer them during this call at the end. If not, we will follow up with you directly. And let's just do a quick, everyone raise their hand if you can hear this, hear my voice. Yeah, excellent. Well, then let's start. Okay, Peak Advisors, how QuickBooks saves time and money. The rules here are, as you know, you're muted and the camera's off. We're being recorded because we're going to post it on our YouTube channel. Put the questions in chat, as we just said. There's a poll at the end, which we want one question to help us improve future webinars. And although the next webinars are not scheduled, the next one will be about exporting and importing data into QuickBooks. Today we have me, Partner Peak Advisors, Alyssa Chambers, controller at a national home improvement company, George, senior manager, partner development at Intuit, and we're going to have a video from Cheryl McKenna, director of new business at Merchant Advocate. Here's our purpose. Primary purpose on this webinar is to demonstrate the importance of considering total cost of ownership when selecting a merchant provider. This is, well, on the next slide, I'll explain why, but this is an important thing to understand. Alyssa Chambers will talk about using QuickBooks Payments and how that has saved your company time and money. George is going to discuss PCI compliance and negotiated merchant rates for lower fees, and anything else that he wants to bring up. And then Cheryl is going to talk about auditing your merchant statements, which I will admit was a new concept to me a couple of months ago when I met Cheryl, and it is very interesting. Here's where we start. Total cost of ownership was a concept that was pioneered by Gartner back in the 80s. And they initially applied it, as you would expect from Gartner, to IT decisions. But really, the basic idea applies to all purchase decisions. And it is about saying, I'm buying something. What are my service costs? What are my labor costs? What facility costs do I have associated with it? And a very simple example is when you buy a car, you pay for the car, but you also, in the total cost of ownership, are going to have to buy gasoline. You're going to have to change the oil. You're going to have to do tires. All of that figures into what it's going to cost you to own that automobile. The same thing applies to most decisions, spend decisions, cost decisions, purchase decisions in your business. And today we're applying that idea to payments and payment processing. And in this webinar, it is defined as the total cost equals merchant processing fees plus the labor to process the transaction. The proposition here is that QuickBooks Payments has a seamless integration with QuickBooks and automates steps that non-integrated processors, picking one at random, Shopify, non-integrated processors that require you to do steps manually. Let me show you some of those steps. Now, this is a workflow we created which identifies steps that are required to process a payment received via credit card or ACH. Now, QuickBooks does, if you're using QuickBooks Payments, most of this happens without you intervening and expending any labor. If you're doing it manually, if you have a terminal off the side and you have a customer who calls in to give you a phone number or a credit card number, and you're processing it on the terminal and you print the receipt, these are things that you can or may not or might not do. You might or might not do them, but they are part of the process to fully document the transactions. And this is important to understand because many times folks are saying, I've got a cheaper rate by using someone other than QuickBooks Payments. It's not the rate. It's the labor to process the transactions that accounts for most of the cost. And we will demonstrate that going forward. And just to make this point, you may object or you may be shocked, but what is the time we're attributing to a non-integrated payment processor and how long it takes to process a transaction. But we have done this in several other areas in the past. And in some instances, like with writing a check or using bill.com, we're right on what all the studies say. So we feel very confident that these numbers, the time we've calculated, is a valid data point. Now, a big cost that we are not incorporating into this analysis is PCI compliance. We have seen over the years remarkable lack of security regarding credit card numbers and bank account information. One of the beauties about using QuickBooks Payments is you, your staff, your company can can set it up if you're using the payment link to never see that information. It's always encrypted. Customer knows what it is when they go to pay. It can even be stored as their preferred payment method, but the company still is going to see it. And with all the concerns about system penetration or employee malfeasance, you really get a very significant value by considering what it means to be totally secure in this area and being compliant. George will touch on that a little bit, but this cost is not included, and it is a real cost, and it is a significant cost. So what this means is using QuickBooks Process streamlines the process. If you're sending out a payment link via an invoice, it is sent to the customer looks at it, the customer enters the information on the invoice, you never see it, and the customer can store it there. And you don't have to do, and I'm just going to jump back, any of these manual steps. All of this is happening in the background using QuickBooks Payments because it's integrated and because the process is automated. Now, in calculating this, we came up with these numbers. Non-integrated, non-automated credit card ACH payment processing is taking about 11 minutes per transaction. What? How can that be? Well, again, think about the steps you go through. You have to obtain the credit card number. You have to secure the credit card number. You can't leave it on a sticky any longer. And you have to enter it in. And then you have a receipt. And then you have to go over to QuickBooks and you have to receive payment. And then you have to make a deposit. Now, you might say those steps don't take 11 minutes. And I'm going to tell you that, yeah, they do. Even when you're being efficient, they do. What's the time if you use an integrated system, automated system like QuickBooks Payments? 25 seconds. Because all those manual steps are happening for you. This is the most significant cost driver of credit card and ACH payment processing. Not fees, but the labor you save by using an integrated automated system. So If the burden rate, labor rate for your person who's processing the credit cards is $40 an hour, 11 minutes means it will cost $7.25 approximately to process a payment. Think about that, to process a payment. Whereas here, if you are paying someone $40 an hour burdened, then payment cost around 25 cents per transaction. And it's important that you use the burden cost. Okay, it's very, very important because that's getting, again, the total cost of that employee. I'm going to give you the first example. This is based on an actual customer. They have QuickBooks solution provider. And this is their fees, their list fees. This is a competitor's rate, their fees. Now, I want you to make sure you understand that these rates are list, there can be negotiated, but more importantly, they vary widely based upon the type of card that's presented. Okay, so certain purchasing cards cost more, certain purchasing cards cost less. A consumer card has a different price than a business card, but the target rate is for the QuickBooks solution provider list rate is 2.8%. And with that, there is a 25-cent processing, strike that, a 25% processing fee and a 30-cent, and the competitor, compared to a competitor's 30-cent processing fee, and their list rate is 2.9. So let's just take a real customer and let's just compare it. $33,000 of volume a month, transactions, 30 transactions. The merchant fees plus the process transaction fee add up to $934 and $968 for the competitor standard. The labor processing cost, and this again is where the real savings occur, it was $7.50 to process all 30 transactions using QuickBooks Payments. It was $218. Now that is $943 using QuickBooks Payments at a slightly lower rate versus $11,186 using a higher rate. So that is a monthly savings of $240, $243 a month. Here's another example. Very large user. They're doing almost 900,000 a month, 225 transactions. They are large transactions, as you can see. This was a rate QuickBooks working with George, Peak Advisors working with George negotiated. This was a negotiated rate they had with a competitor. Here's the transaction cost per transaction. Here are the merchant fee comparison. Well, $3,000 is a nice savings. But the labor cost is where the real savings is. $56, $60 to process these 225 because no human is touching it. $1,600 if they're using the competitor. That generates a savings per month of $4,600. Very, very significant for this customer. And lastly, what happens when the rates are the same? We're getting a QuickBooks Payments rate of 2.5. The competitor was 2.5, $50,000 of transactions. Here's the transaction cost each. Again, 25 cents, $7.25. Here's the processing fee. It's the same. The merchant fees then, of course, are the same. But again, look at the labor cost difference. It's a savings of $350 a month. Now, even if you don't accept, or your boss doesn't accept, or your employees don't accept that the difference is that extreme, you have to admit that the difference exists. Because again, use QuickBooks Payments, you don't have to receive payment. QuickBooks Payments does that for you. You don't have to make a deposit. QuickBooks Payments does that for you. You don't have to document. QuickBooks Payments does that for you. Now, so you may argue about it and how much time, but it's a real difference. Where are we on? Let's see where we are on time. Okay, we're halfway through and we've got 3 guests. So this will eventually be up on our YouTube channel, but let's plow along. And again, here's recapping the savings. The first example, $243 a month, $3,000 a year. Second, $4,700 a month, $56,000 a year. That pays for an employee. And even when the rates are same, here are the savings. Main driver, the main piece to take away is rates are not the primary driver of the cost of processing credit cards. It's labor. Eliminate the labor, and you're going to be saving time, saving money, and more efficient. And you do that by using an automated, integrated payment processor like QuickBooks Payments. So right now we're going to bring in Alyssa, and I'm just going to leave this right here. And I'm going to unmute her. And hello, Alyssa. Unmute yourself.
Hello, Michael.
Hello, Alyssa. Say hello to everyone.
Hi.
So Alyssa is as I mentioned earlier, controller at a large home improvement business here in Denver. And we've worked together over a number of years on various QuickBooks related things, including payments. So the question, Alyssa, is, do you think using QuickBooks Payments is saving you time and money, and is the savings significant?
It does save us time and money for sure. Before using QuickBooks Payments, we were taking homeowner credit card numbers over the phone and processing them on our computers, or our installers were collecting checks and bringing them to the office whenever they came to the warehouse next, which could be a week from now. So it definitely saves us time, and it saves us the error as well from installers maybe possibly losing checks. It makes the time for the money to reach our account faster, no more lost checks. It also keeps my teammates off the phones, which they actually prefer. The integration on the back end is a time saver as well. We don't have to manually enter any of the charges into QuickBooks that are received from the credit cards. They automatically integrate. And with our previous provider, we were having to list those one by one. So that time savings is very real. Since Peak Advisor suggested we try QuickBooks Payments, we significantly reduced the labor to process a credit card or ACH payment, and accuracy has increased. And we're convinced that it saves us both time and money, even after considering the fees. But the fees were negotiated, so they are a better rate for us than they were before. So that's a savings as well.
That's great. I'm glad that you could inform everyone of what the benefit has been to you. And I mean, we're talking here, folks, hundreds of transactions a month. So that is significant labor that is no longer used to call customers to get a credit card number. That is significant PCI risk that is no longer being incurred by this company. And it is really freed up a lot of time. I've seen the benefits of that when I've visited Alyssa. So anything else, Alyssa?
No, not on that. I do feel like we are more PCI compliant now, though, as well.
You are.
Yeah. So that is very good. And we don't save the numbers anywhere, and we don't have them written on stickies anywhere. And we feel comfortable filling out our PCI compliance forms every year.
Okay. Well, that is great. Thank you for joining us, Alyssa, and thank you for making those comments.
You're welcome.
All right. Okay, we're going to move along, and we're going to jump ahead to a video from Merchant Advocate, and I think you all will find extremely interesting.
Hello, it's Cheryl McKenna with Merchant Advocate. Merchant Advocate is a unique service that helps your business save money on the rates and fees that you pay to process customer credit card payments, but without switching processors. Merchant Advocate is not a merchant service provider, so we don't want you to switch processors. We are merely consultants and advocates that find every reason that you are overpaying for your merchant services, and then we fix those so you can save money without switching. It all starts with a free audit of your statement, and I want to show you why everyone should get an audit of their merchant statement. Right here on the screen, what you see is a portion of one page of an actual merchant statement that we received a few years ago. I think it's a great example of the complexities of the industry and how confusing it can be. If you look at all of these line items, most people don't understand what they mean. They might as well be written in Egyptian hieroglyphics or a foreign language, but luckily we know what every single one of these line items mean. And by diving into these, we can find every reason that you're overpaying your merchant service provider and then fix it. So let's look at some of the examples on this statement. The first two areas, these are marked up above cost. So these specific line items are wholesale rates, and those wholesale rates are published by the card brands. Visa, MasterCard, American Express, Discover are the card brands. The wholesale rates, there are about 600 plus of them, can change every April and October. So at Merchant Advocate, we know what the cost is of each one of these, and we can determine which ones your processor is overcharging you for. The second area is items that should be credited to this particular business on the statement, but instead were charged. If I owe you $100, but I take away $100, guess what? You're actually out $200. This last item on the statement is one of my favorites. It's actually a made-up fee. So remember when I said the card brands publish their cost? The good news is when we scan a statement at Merchant Advocate, we can quickly determine which one of these items is a made-up fee, and you'd be surprised how often that happens. Just this one portion of this merchant services statement makes up over $400 a month, almost $5,000 a year, that the business is overpaying and had no idea. Now, we will adjust and negotiate your rates with your current provider. Remember, first it starts with the free analysis, and everything that we find, we're going to go ahead and fix that. It might be that your processor is overcharging you, but it could be something else that the processor's not even aware of. It could be that your equipment is not programmed correctly, or if you're in a point of sale system, it might be that your point of sale system is not communicating properly with the merchant services. That could result in paying more than you need to. I just recently looked at an orthodontist's statement, and his system was charging him 35,000 additional token fees every year that were completely unnecessary. Not only do we adjust and lower the rates, but we audit your statement every single month to ensure that your rates stay low. We'll find any rate increases, fee additions, maybe some of those made up fees, errors, and we will be able to address those in a timely manner. We are your merchant services consultant and advisor, and we will help you with all of your merchant services needs. You can find all of my information on the Peak Advisors website. I encourage you to send a statement and schedule with me today. Thank you so much.
I want to thank everyone for joining us. Please let us know if there's more information you need, and have a great rest of your day. Thank you for joining us.